Hey everybody, Angel Medina here. Thank you so much for watching this video. And I want to thank you for if you have subscribed to my channel. It means a lot to me. Like I said, on this channel, I'm always looking to bring value to people out there that may not know some of the topics I'm going to go over. They don't teach you this in school. So on today's video, I want to go over credit, the do's and the don'ts. A lot of times I have people where they feel that they can do something with their credit and it's going to help them, but in actuality, it actually makes their situation worse or much worse. So on today's video, I'm going to be going over the do's and the don'ts when it comes to your credit report and getting your score higher so you can do what you want, whether it's purchase a house or just to make sure that your credit is where you want it to be. Okay, so on today's video, I really want to get into the do's and the don'ts when it comes to your credit. A lot of times I have clients that talk about they have credit and they want to go ahead and fix their credit and they're going to work on it and eventually hope their credit score gets higher. So what happens is when they do work on their credit and they're trying to get their credit score higher, they have all the intentions in the world for their credit score to go higher, but they don't know where to start. So they're going into the situation blindfolded. So on today's video, I really want to go over what are some key factors when you're trying to build your credit. Now you'll notice a lot of the times right now you'll hear these commercials, and these commercials, and I see them as well, they're offering you assistance on helping with your credit. But most of the advice they're going to give you, I'll be giving you today on this video. So that way you don't have to pay someone monthly to do what you can do very easily. So the first step I would say is if you are looking to improve your credit, you need to go through each of your trade lines that have, like I would say, revolving credit, such as a credit card that you have, any kind of, let's say, personal loans, anything that you know that you pay out of your pocket every month, and you know for a fact that you can either pay it back or you can either just leave it alone, and you know for a fact that it's going to be reported on your credit report. Now, the key factor about these type of loans, such as credit cards. So the first thing I want to emphasize is credit cards. Now, this is easier said than done, but a lot of the companies out there that are going to try to help you with your credit, they're going to go over this very topic. Now, the thing is you need to first focus on, if you're working on your credit score, the first thing I would say is don't think that if you pay off your credit completely, that it's going to raise your score automatically. That, in actuality, may be a negative effect on your credit. So what you need to focus on is getting your balance down to 30%. Now, like I said, it may sound easier said than done, but that is the main thing you want to focus on. And if you do that one thing where you don't close out any of your credit cards and you just get them down to 30%, and once you get them down to 30%, you just, I would say, even if you could, maybe cut up those credit cards and don't use them again and just pay the minimum payment, you'll start to see your credit score go a lot higher. Now, the reason being is the credit companies are going to then start offering you a lot more credit because they see that you can handle the credit that you already have. So again, the first step would be to get any kind of credit cards that you have, find out what you owe, and get them down to either, I would say, 30 or even 25%. So if you have, let's say, $1,000 available, you only want to use $300. That is making sure that once you use the credit cards, and you pay them down to 30% or 25% or even 35%, you want to make sure not to use them again. So that's very critical. It's going to be defeating the purpose if you pay them down to 30% and then you use it again. If you go ahead and you just pay down the credit cards, I would focus on the ones with the higher interest rate first, down to 30%. Once you do that, you're going to start to see your credit score go a lot higher. Now, there's a lot of credit companies out there that promise you to, give you your score and to let you know exactly what your credit is for, and they tell you it's free in the beginning, but then they end up making you pay a monthly fee. The credit company, and I'm not someone who is trying to promote this company, it's just a company that I recommend because I personally use as well, is Credit Karma. So I'll go ahead and put in the description the website. It's creditkarma.com. They're a good company because they are actually free. Now, obviously, they're going to try to advertise any companies they work with. They have to make a living, but you don't have to subscribe to anything. They do give you your credit report. Now, they don't give you for all three, but it is a really good start on focusing on what you need to do with your credit. And they do alert you when anybody has pulled your credit. And let's say that they do alert you on some things you can do that will help your credit. And some of the things they'll go over with you are the exact same things that I go over. They may be gearing you towards a certain type of credit card that they want you to work with. So that's another thing that you have to watch out for. So when you do start to pay your credit cards down, you're going to be enticed by other credit card companies to get another credit card or to increase the balance. Now, you have to be strong during this time period if you can do it at least for 3 to 6 months, whatever your goal is. And at that point, if you do feel more comfortable to use these credit cards, just know that whenever you go above 30%, it is going to affect your overall credit history. The name of the game is have different credit cards. I would say get maybe 3 to 4 to 5 different credit cards. Try and only use 30% of each credit cards and try to go with the ones that you like the best and use them and then pay them down to 30% on a monthly basis. The other thing is if you do have, let's say, like a personal loan, like let's say a car loan, obviously you just want to make sure to pay those on time. Let's say that you do have a higher interest. If you focus on the first aspect, which is getting your credit cards down to 30%, you're going to see your credit score go a lot higher. Then it'll put you in a much better situation to try to get a lower interest rate so you can actually lower the rate and the payment on your car loan as well. So again, if you are thinking about improving your credit, I would say the don't is don't pay off your credit cards, because by you paying off your credit cards, it's going to actually make your score go lower. And the do's is try to sign up with a card company. Even if you want to go directly to the source like Experian, Equifax, or TransUnion.com, you can go on there. I don't think it's a bad thing, and you can pay a monthly service and they'll notify you if anything bad has happened with your credit. Or you can go on to sites like lifelock.com, and that's another good site that will actually monitor your credit and let you know if anyone is trying to pull your credit or anyone's trying to utilize your credit. That way you'll be alerted anytime that happens. But the do's, I would say, is you do want to pay down your credit cards down to, I would say, 25, 30% is the key number. That's a good place to start off with. And you want to keep it in between 25 to 35%. So once you get it there, you have to remember the don'ts are, once you do get it down to 30%, let's say, you want to make sure not to use the credit cards again, because that's going to be defeating the purpose. If you can just make them at a 30% balance, and you'll start to see your score go dramatically higher, then at that point, you can then use that credit card. But the key factor is to pay it down to 30% before they go ahead and report it to the credit bureaus again. So that's another really important key factor, which is once you do pay it down to 30%, you can literally call these credit card companies and ask them, when do you guys report to the credit bureaus? And they'll be more than happy to tell you, oh, we report the 5th day of each month, or the 2nd day, or the 1st day of each month. So what you want to do is, I would say 9 days before that, you want to pay it down to the balance, knowing that they're going to report each balance on your credit card. So let's say they report on the 1st of every month. 9 days before the 1st, you pay it down, and then on the 1st, they'll go ahead and report it to the credit bureaus, and then you can use that credit card again, let's say on the 2nd. I would wait until the 3rd or the 5th day, and then you can use that credit card again, and then again continue the cycle of knowing when to pay it down. That way it doesn't affect your credit should you need to use those credit cards. So again, the most important thing, you're going to hear all these commercials offering you, hey, go onto this website, sign up, and we'll help you monitor your debt. But it's pretty easy. Now, the other thing I want to go over really quick is if you have any, like let's say medical or collection accounts, and you're trying to pay them off, and you're stressed out about paying them, I wouldn't say not to pay them off when you can, but I would say that collection accounts, when they have to do with medical, they don't dramatically hurt your credit score. So if that helps you where it takes a lot of stress off of you, I would say that you should know that. You shouldn't be, they're going to call you a lot, and yeah, they're going to try to get you to pay them off. But I would say is just know that it's not going to hurt your credit score dramatically, and it won't affect you if you're looking to refinance or purchase a home as well. So again, I hope that helps. There's a lot of key things that I was going over in this video, and you're going to hear a lot of different things from commercials or other companies trying to get you to sign up with them. But if you could just focus on the things that I went over today, which is the credit cards. Now, if you don't have any credit cards, then you need to go out and get some. I would say it's a good idea to work your way up to getting at least 3 to 6 credit cards. Keep it like around 4 would be a good idea. And again, try to keep the balances at 30%, which will help you in the long run to raise your credit score, and to allow you to do things like when you purchase a car to get a lower interest rate, or you purchase a house, or you refinance, it'll put you in the best position to make your credit score work for you, and that way you can get the best rate and the lowest payment. So I hope that helps. I hope this video was of value to anyone watching it. And if you are new here, I would ask you to please consider subscribing to my channel. And if you notice next to the subscribe button, there's a little bell. Go ahead and hit that bell. And what that does, it notifies you anytime I do upload any new videos. Thank you so much again for watching this video. Angel Medina, your lifelong mortgage advisor. Thank you.